be needed to avoid a double-dip recession in housing. Stimulus in this case meaning federal stimulus funded by the taxpayers. Let's talk to Stifel Nicolaus, Chairman and CEO Ron Kruszewski, and we welcome back Republican House member Jeb Hensarling from Texas, who sits on the House Financial Services Committee. Jeb, great to see you. Let me start with you. You heard Barney Frank say no Fannie Freddie refinancing. He actually later in the show said it's time to phase out Fannie and Freddie. But on the question of stimulus, Jeb, what's your take on this? Do you agree with Mr. Frank, and what are your colleagues thinking?
Well, not unlike the broken clock, I guess we agree twice. No, we don't need any more stimulus. The only thing that the stimulus stimulated was the federal debt, which is the largest we've seen in the history of America, largest as a percentage of the economy since World War II. They've thrown tons and tons of money at the housing market, and all we have are still continuing high foreclosure rates. I mean, the best housing foreclosure mitigation plan is a job, and unfortunately, this administration and this Congress has it all wrong.
All right. So let's go talk to Ron Kruszewski. Ron, look, I'm told you want more stimulus. I want to ask you, though, what about today's refi number? You've got soaring refis. This trend continues at rock-bottom interest rates. You could put another $40–50 billion into the spending stream. What do you think about this? Is it going to be enough? There's a chart up on the full screen. Look at that over the past year, how refis have exploded. That's the Mortgage Bankers Index of refinancings. So I guess, Ron, what I'm asking you is the private bankers and the savings and loans and the rest of them are doing the job. We don't need federal government, really, do we?
Well, they're not doing the job, Larry. The private sector would not be buying these mortgages without the Fannie and Freddie's guarantee. So these refis that are going on, you should question that. I mean, think about cash for clunkers for automobiles. We didn't send $8,000 or $4,000 to every car owner. We put stimulus on new home purchases. This refi boom is going to, I can't wait 2 years from now. People are going to be saying, why aren't you buying a new house? And they're going to be saying, because I got a 4% mortgage. I don't want to let it go. So, you know, why are we having this stimulus being thrown at refis? They think it's going to run into the economy. I think it's just increasing the savings rate.
No, wait a minute. Wait a minute. You're confusing me. You kind of warbled around on that answer. This is not federal stimulus. This is private. These are bankers and mortgage owners. And they're refinancing because rates are down, mortgage rates are down from a year ago by about a percentage point, maybe more. You're at 4.5%. This is the natural private sector free market order of things.
Wait a minute, Larry, who's taking the credit risk? Since when did you run up against that? Who's taking the credit risk on a Fannie Freddie guaranteed 4% mortgage? I own a bank, okay? I'm not banking these loans. We're doing these refinances, but they're Fannie and Freddie. At one point, 95% of all the loans were guaranteed by the government. That credit risk, the first loss position's the government. It's not the private sector.
Of course it is. Well, these are private decisions. Let me go back to Jeb on this. Jeb, this is not Fannie and Freddie making a decision. These are individual bankers who are providing credit for refinancing purposes, Jeb. Is that not right? I don't think Ron understands the Mortgage Bankers Index. I don't think he gets it.
You want to bet?
Well, yeah. Well, I don't know whether he gets it or not. But the bottom line is, yes, at these rates, there is a huge boom in refinancing. But ultimately, we still have Fannie and Freddie, the government-sponsored enterprises, along with FHA, essentially controlling 95% of our housing market. And we've already had 150 billion reasons why we need to phase out the government-sponsored enterprises. I, of course, speak at the bailout, $150 billion of taxpayer money. Ultimately, before the government-sponsored enterprises, we had a competitive jumbo market. We had problems in the subprime market, but it wasn't a lack of competitiveness. The free market will work if we let it. Now, we're going to have to transition away from Fannie and Freddie, but that's one of the reasons I've introduced the GSE Reform and Taxpayer Protection Act, perhaps not creatively titled, but it is indeed truthfully titled, and that is it would provide over a 5-year transition period. It would get rid of the taxpayer hemorrhage, which will prove to be the mother of all bailouts, Fannie and Freddie, and return it to a competitive posture where it needed to be in the first place.
Well, Jeb, Barney Frank may co-sponsor. Have you talked to Chairman Frank? He said on the show last night, I'm going to give him credit because I'm going to take him at his word. I don't believe he would have said it. He agreed with me that a phase out of Fannie and Freddie, downsizing it essentially into the FHA and then ending it, putting it out of its misery. He agreed with me on that, Jeb. Now, what's your reaction? reaction to Mr. Frank?
Well, I've had a number of conversations with Chairman Frank, and I appreciate that he has come to this conclusion. I personally came to the conclusion 8 years ago when I first came to Congress, but better late than never.
Well,
and
Jeb,
listen, Chairman Frank is a man of his word.
I'd take a burning bush any time, Congressman. You know that. Burning bushes, these are spiritual events, for heaven's sakes. I'm sorry, please continue.
No, listen, one, you don't have to have a government-sponsored enterprise to have a healthy and competitive housing market. And so I agree, if you're going to make the public policy decision to subsidize housing for low-income people, you would want to do it via probably a vehicle not unlike FHA. But even there, you have to be careful because of the political pressures that always keeps down the rates that should be actuarially sound and increases the benefits. That's why almost every single federal guarantee or federal insurance program is either underwater or soon will be. But if you're going to have a subsidy, you would want to do it through an FHA-like structure. No doubt about that.
All right, good. Ron Kruszewski, back to you. I want to raise this point. Affordability in how, I know you're a pessimist on this, but affordability. First of all, home prices way, way down. Second of all, incomes are rising, about 3.5%. Hours work time, average hourly earnings. Third of all, rock bottom interest rates. Now, traditionally, that points to a better affordability ratio for housing. Might not that work gradually, Ron?
2 points, Larry. One, housing is still up 58% from 2000, and the average home is 4.5 times average income. And both, couple that with oversupply, and that's part of the problem. So I think housing relative to average income still is pricey. But I want to go back to that because you told me I didn't understand something. I'm going to say something to you. If you take Fannie and Freddie out of the market today, and you're going to tell me that 4.5% mortgages in the mortgage refinancing boom would be happening today?
No,
there's no way.
That's not my intent. All I'm saying is the Mortgage Bankers Index reflects decisions by the private sector bankers, be they thrift bankers or commercial bankers, or I don't know if you make any of these loans. Yes, I know. A lot of that paper is guaranteed by Fannie and Fred. Not all of it, but all I'm saying is that's different than having Fannie and Fred pour more money in for refinancing,
Fannie and Fred,
which even Barney
which
Mr. Frank opposed. This is a private sector decision, and I think it's a very positive one. We want refis.
Fannie and Freddie are taking the credit out of the equation. Mortgages are trading, option-adjusted mortgages are trading right on top of government debt because the credit is being borne by the U.S. taxpayer.
Yeah, but don't forget the individual bankers have to make a decision whether to refinance the loan. They weren't refinancing it until the last, 6-9 months maybe. That's when this thing really got started.
You don't have to make a decision when you sell it to the secondary market with a Fannie Fred wrapper around it at that mortgage rate. I do it every day, Larry, so I understand that.
I'm sorry, that's a different function. They're not creating new mortgage packages here. They're refunding existing mortgages. I go to my local community banker in Ridgefield, Connecticut, and he or she's going to tell me whether they'll refinance or not.
They repay your old loan and they give you a new loan. But
Thank you. But they weren't even doing that before, for heaven's sakes. That's the point I wanted you to acknowledge. Finally, it only took me 35 minutes. All right. Jeb Hensarling, I want to ask you one last question. Government Motors, sometimes called GM, is issuing an IPO. I don't know how much it's going to be, $15, $16 billion. They're going to pay down the Treasury a little bit, not a lot. Treasury is still own half of the stock. Isn't this Fannie Mae and Freddie Mac dressed up as a car company? They're selling stock as a private transaction, Jeb, but we know that the U.S. government is guaranteeing Government Motors. Doesn't that get your back up?
Well, absolutely. I mean, Fannie and Freddie are the epitome of crony capitalism, and Government Motors is obviously not too far behind. I mean, the Congressional Budget Office, run by Democrats, even says that the taxpayer will never get their money back. And frankly, I bristled at these commercials that came out, I don't know when it was, 45 days ago, saying that they had paid their debt. Maybe in a legalistic sense, they paid the debt, but the equity that the taxpayer has, he'll never get a rate of return on that. We never should have done it in the first place. You can't have a system where you have capitalism on the way up, where you have socialism on the way down. You privatize your profits, you socialize your losses. And it just, again, goes to the fact that we have the largest debt in our nation's history, which is, frankly, the greatest threat we have to the future of our children and grandchildren. It's got to stop.
All right, so Ron Krzyzewski, I'm going to give you the last word on government motors. You're going to be part of the syndicate, aren't you? You're going to help distribute the stock, which is basically U.S. taxpayer-owned stock. Is that what you're going to do?
Well, sure. I would like to, but you know, hey, Larry, look, come on. I mean, this is the twilight zone. All right, we're talking about the government. I was talking about the government out there. It feels like a non-deal roadshow where the government's talking about General Motors and owning General Motors. I mean, this is the kind of stuff, a bailout nation and things that are going on, whether it's Fannie and Freddie or all the subsidies that are going on to prop up this economy, that we have to peel back cautiously, but we've got to get back to free market capitalism.
All right, now
government motors